let's talk about the market and where the money is moving this year. Last year we saw the Nasdaq take a hit, 33, down 33% for the year. A lot of the companies we talk about and love come from the Nasdaq. Obviously, it is full of tech companies. So talk about where the money is moving. We've seen companies like Nvidia have a great start to 2023. We've seen Microsoft have a pretty good start. Apple, same thing. Where's the money going this year right now?
Yeah, it's so strange. There's this barbell thing going on. It's a little offense defense going on right now. First of all, $500 billion into money market funds in just the past several months. I think 100 billion of that, guys, was last week in the middle of the bank freakout. Guess what people were doing? I'm taking money out. I'm putting it in money market funds. I'm taking money out of the stock market. If I still had it there, I'm going money market funds. 4% on a money market fund is beautiful. Boring is beautiful right now. So that's where a lot of defensive money is gone. CDs, money market funds, government bonds. You see the yields on bonds moving around a lot. That's a lot of people running for safety. Gold, actual gold bars. That's up like 6, 7, or 8% so far this year. That's a typical flight to safety trade that a lot of people do. They're freaked out about the stock market. They go to gold, they go to bonds, they go to cash. But also we mentioned Bitcoin. Now, I don't believe that's a lot of retail investors, although I buy it every few weeks, just a little bit, $50. We're not moving the market on Bitcoin. That's big whale money moving the money on Bitcoin. But why is the Nasdaq 100, right? These are the 100 biggest stocks in the Nasdaq. The ticker for that for the ETFs is QQQ. Why is that up so much this year? I think that's up something like 15, 16%, right? QQQ is up 16%.
It's a lot for a quarter.
That is driven by the biggest stocks with the biggest market caps on the Nasdaq. And what are those? Apple and Microsoft, the two most widely held stocks on the planet, right? And those have become the safety trade for a lot of investors. Don't you think, Ian? A lot of people are like, I'm freaked out about everything. Let me go with these two guys that I know really well because they're really big, really well capitalized, and have a ton of cash.
Yeah, I agree 1,000%. Have you heard about Balaji's insight on Bitcoin going to $1 million? What do you think about that? And also, if I wanted to research credit default swaps, where could I actually track that stat to see if it's going up or going down on the site?
Right. Great question. So there are some research shops and newsletters that track credit default swaps every single day, but you can check on some banks that offer credit default swaps. You can look at the pricing and you could put in the ticker just like you would for a stock. And you can look at the price for what it would cost to buy a credit default swap. Individual investors can buy them. You need to be a little bit more accredited. You need to have a lot of money to actually do something. And you actually need to have a lot of money to make a lot of money. So this is not for retail investors to play with. I would recommend. But you can track just by ticker what the credit default swap price is right now and when it expires, because like insurance contracts, these have a term to them. So like an option too, right? It's a derivative. It's an option. There's a term to that insurance deal. So you got to look at the pricing and you got to look at the date of expiration, and you can see where the vulnerability is. Just Deutsche Bank, I mentioned that last week. It's like the 14th biggest, or no, 21st biggest bank in the world. It's a huge bank. It's got $1.5 trillion, and it is Germany's biggest bank, and that's one of the biggest manufacturing economies in the world. That bank is fine, but the credit default swaps went up like 30% last week because people got worried about it because of Credit Suisse and because of the fact that if we go into some global recession, Germany's going to feel it. It's a really big manufacturing economy.
So somebody put in the chat, what is the 401k safe?
Up to $250,000 it is. That's insured. Again, that's scary. If your broker goes down, if your broker gets taken over or goes into receivership with the SIPC, right? But not if you make a bad decision within your 401k. That's your problem. But your money that you have in there right now is insured up to $250,000 should your broker fail.
Is there a historical precedent set for a brokerage account, a brokerage going out of business and people losing money? Like, has that ever happened?
Yeah. Have you heard about Celsius? Have you heard about FTX?
Well, I mean, like,
like a real broker? No,
a real broker, like
a chop shop, chop shops all day long. Chop shops out on Long Island all day long.
Like the Wolf of Wall Street?
Yeah, Wolf of Wall Street type chop shops, but not
like Fidelity,
Fidelity or Schwab or E-Trade. They usually get acquired. They usually don't.
Right. No, people want those accounts. And a Bear Stearns is different, right? That was a global bank that was having super liquidity problems and a huge run on the stock, and the Fed did not let it go under. They were a broker too, but they're really an investment bank. So nobody of that scale. Oh, chop shops
Yeah.
go out of business every single day.
Caleb, you brought up gold, and so it makes me wonder: are there other commodities that we should keep our eye on in 2023? Are the ones that we should keep on our watch list?
Absolutely. Chocolate. Guys, I was looking at stocks at 52-week highs just before we got
Yeah.
on, because I like to see, as Ian knows, trends in motion sometimes stay in motion until something
Yeah.
breaks. There are two chocolate companies that are at all-time highs, 52-week highs. Hershey and what's the other one? Mondelez, maybe, that makes chocolate as well. I was blown
Yeah.
away by that. So chocolate, keep an eye on that. Keep an eye on sugar. Keep an eye on copper. Everybody makes a big deal about gold because it's the shiny object in the room. We call copper Dr. Copper for a reason. Copper is a great leading indicator of where the economy is going and often where the market will follow, because we use copper in all kinds of things, right? We use them in phones, we use them in manufacturing, we use them in our dental equipment. We use copper all the time. So that's a great leading indicator to watch. And I would keep an eye on lumber prices as well. You guys remember we were talking back in 2021 or 2020,
Yeah.
lumber prices were sky high and then they crashed. Watch lumber prices to see if we're going to get some sort of a rebound in the housing market.
Yeah,
That is
Hershey's at $93 in 2018. It's at $250.90 right now. I didn't mean
Hershey's,
to cut you off,
go
Troy.
figure. I don't even know.
Yeah.
no. I was saying lumber prices are great for people who are, in construction or building.
Or
new homes.
building.
Yeah, they know the price of a board right now. They could tell you right
Yeah.
now to the penny.
If I'm watching the show and I'm terrified, I'm seeing all the banking news, I'm seeing FTX blow up and seeing SVB blow up. What 3 pieces of advice would you give to someone who's watching that wants to invest, but it feels like it's the most terrifying time to do so?
That's a great question. And I get scared. I've been in this a long time and I get
Yeah.
scared sometimes too. So I have a couple of rules. And I think I've heard Ian say this too. What's your threshold? What's your threshold for losses? For me, that threshold, and I'm 52, right? I've got about 30, 40, hopefully 30 years of investing left in front of me. And that's a long time. My
Yeah.
threshold probably for losses is around 50% until I'm just like, I can't. So I know what my
Yeah.
pain point is, right? What can I recover from? What do I have the time to recover from? So you got to determine that, right? Then realize that these things happen a lot, right? These cycles happen. They may feel like they're happening a lot quicker these days. Time is compressed. Social media is giving us the echo chamber. It feels like it's all coming at us at once. Last week felt like 6 months. I was talking about this nonstop. So these things happen and they're happening faster, but eventually they resolve. We go through cycles. This is a pure product of massive inflation coming out of the pandemic, a huge rise in interest rates to tamp down inflation, and all the broken pieces that we're going to discover, or as Warren Buffett likes to say, when the tide goes out, we're going to see who's swimming naked. There's a lot of banks swimming naked. There's a lot of tech
Yeah.
companies swimming naked right now, right? There's a lot of companies that binged on cheap money, right? But this cycle is going to end at some point, and you can actually see it in the Fed's dot plot and in their summary of economic projections. Growth's going to slow this year a lot. It's going to pick up a little next year. Interest rates are going to come down to around 3% by the year 2025. That is a much more normalized environment for investing. And by the way, while we're all worried about a bear market, we're not in one anymore. And the Nasdaq is on its way to a bull market. So there's always a place to invest. Cycles happen. You got to stay with it. And you got a dollar cost average. Because if you were smart, and I heard Ian saying this, I heard you guys saying it in the last couple of shows, you've been dollar cost averaging into your favorite stocks for the past 8 to 10 months. If
Yeah.
you were smart and you've been getting great deals and your average price is low and you're probably sitting on gains right now. So that's what I would say. These things pass and then we resume, we normalize, and then something else happens. But long-term investors, right? The tortoises, they're the ones that usually win the race.
You said the Nasdaq is headed towards a bull market.
Yeah.
Yeah.
Elaborate on that as far as the long term. So its high was 14,646. It's currently at 11,768. Backhand math, that's probably still 30% off of its peak.
Right. But you want to look at where it is off of its low.
No, I'm just saying. So what I'm saying is that what's the outlook for the Nasdaq next year and a half?
Well, because the NASDAQ is a market weighted index, right? Market cap weighted index. In other words, it's moved by the size of the biggest stocks in the index. It's going to move wherever Microsoft and Apple and
goes.
NVIDIA want to take it, right?
Yeah.
So as investors are thinking the Fed's going to eventually pause, that's one of the reasons we've seen this rally. One, Apple and Microsoft feel like safe stocks. They pay dividends. They're massive. They have a lot of cash. But also, as interest rates start to cool a little bit, maybe after May, after June, they're going to either stay kind of at these levels or they're going to come down over the next 2 years. These tech companies are going to benefit. So the Nasdaq's going to do well because it's market weighted and the biggest stocks drag it around. And as long as investors are piling into the safety of big tech stocks right now, like they are, the Nasdaq's going to keep rising. Now, we get another shock to the system, that could change everything. But right now you're seeing this bifurcation, right? Of what was hot is no longer hot, but also the 2020 stocks, those are long gone, but the leadership is back in the big, strong tech stocks. So that Nasdaq should continue to do pretty well. It's already separated from the S&P 500 by about, I don't know, 16% or so. So that I would probably think that that's going to continue unless we get another shock and the Fed goes, we're raising rates a full percentage point, which they won't do because that'll break everything. So I like the trend of the Nasdaq right now, and I buy the QQQ ETF, and I buy it all the time, up, down, all-time highs, 52-week low. I keep buying it because I believe in that, like you guys, growth long term.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.